Ding ding. Well, that was a fun day. I guess we did close to the downside of 43.50, although not remarkably. So breakdown here is kind of interesting. All right, so we're kind of right up against today's fast gamma and DN. I guess DN's probably more important here. If we don't break this, our chances at a bounce are going to increase the longer we trade in this range. And given that next week is SLD, our propensity to bounce is quite high in the pre-SLD period. So I would be very cautious of moves between delta neutral and gamma neutral. I don't think that there's going to be any data this week that's going to support like a strong move back to the upside, especially after today. But be really cautious of that, because even though this is distributing, there's still longer dated call interest that's locked up like in this range right here, and that didn't get blown up today. Right, and that's for a lot of that's for like 1117. So yeah, if we don't continue to fall, make sure that you have some sort of protection for the upside here, because that'll be important. Although this could be a good opportunity to add puts, you may want to confirm the breakdown before doing so. Damn, ES volume was crazy today. The miss on the tail of the 30-year was a pretty big deal, and it's showing that there's really not a lot of demand for the long-term yields, and that those yields are likely to move higher again. And that's the first thing that's going to do, is that's going to scare out everybody who bought yields over the last, or bought like 10, 20, 30-year treasuries over the last 7-8 days, because it immediately tells them that they could take a huge loss on their position. Right, they already did. Anybody who bought treasuries between Tuesday and today is at break even to underwater. So yeah, keep an eye on that. Obviously, the wider credit spreads driving dollar up, or dollar driving wider credit spreads, however you want to look at it. And that's going to put pressure on volatility, which we saw today, and we're seeing that in the core 3-month as we see volatility leave equities and start flowing back into the indexes, and that sets us up once again for moving into that higher volatility regime. But obviously, this is far from being confirmed, right? It's simply kind of stopped the flow the other way. So the breakdown of the dispersion is kind of just flat right now. If that continues, we'll see like core 1-month and 3-month move up. We are seeing yields go up, and we're seeing volatility move up, and those forward returns on the convexity and volatility moving forward are going to attract more bond portfolios towards those long vol positions again. And we can kind of move back into a similar period like we saw back here in this was like mid-October. And all of this still very much lining up with the time period we're in with like SLD and OPEX, right? The last several pumps have been within that same time period, right? If we kind of go back to August and September, we've had a pretty consistent pattern of moving up into the pre-SLD OPEX period, where we get a large amount of de-risking. Then the SLD settlement period and post OPEX period, we tend to experience our greatest moves to the downside when everyone's all margined up and super liquid, right? I don't think this is that different. I think our current high is still below the prior month. Yeah, if we go back here, 43.93.57, 43.93.40, and now that we've failed that, that's on the monthly, that's actually really, as a technical indicator, very significant. Failing to break over the prior high for this month means that there's a really good chance that this month doesn't actually close green, or it could close nearer flat. So on the technical side, we'd be looking at 43.30, where we know delta neutral is. Obviously, that's a very important resistance. And then below that, 42.72, 42.20. As we lose those levels to the downside, not only would we gain momentum, but bears are going to gain a lot more confidence, right? And they're going to start pushing down into all that compounded Vega risk from the last from the last week and a half. So keep an eye on that. I don't think I have a print for move yet. Probably not. Usually it's maybe like 4:15. I'll get it. I have a good feeling bond volatility is up, and we know that bond volatility is going to pressure correlation. USD JPY also up, and what we're going to see now because of this is we're going to see participants lean on the carry trade, right? And we're already seeing a lot of it today, right? The carry trade bounced really hard, almost 20%. But as they lean on it this time, now that the YCC's changed, they're also going to pressure yen up, right? Which makes it harder for them to short yen and get the liquidity or the hedge they need for the carry trade, right? So this will be interesting because this will drive Japanese bond yields up, and if Japan doesn't step in, there's really no cap there. And as far as we know, there's no real limit to the Japanese 10-year right now. So this will be a dynamic that didn't exist before in our previous downside moves. And I'm still kind of curious as how we're going to see it play out, but something to pay attention to at least. GME didn't do shit today, down 5%. So yeah, back to that like $12 range. We could drop lower into next week, possibly, but liquidity is starting to get kind of blown out. XRT especially is getting quite low. Upstart still selling off, probably going to go lower. So Fubo back to the 264 resistance. Support here will be important, but I don't think Russell's going to turn around too quickly. And Russell didn't really move a lot on our move to the upside, and that's kind of why I went long Russell this week, was because if liquidity was going to come in and firms were going to go risk on into the end of the year after picking up all their short alpha on the big drop, there would have been a lot more demand for small caps, and there really wasn't. It's one of the reasons why this pump seemed to lack any like good structure, right? It just seemed like it was just a big push in tech and yields, and once everything squeezed off, there was really no more interest to the upside. And so Russell's probably going to drop back. If Russell falls back to where charm is negative, it's unlikely that it's going to recover anytime soon, and that'll drag Fubo's price down. So keep that in mind. Siri actually closed up today, but I don't really know what the fuck's going on with that. Yep, that's about it. So thank you guys so much. I'll see you bright and early tomorrow morning, and I'll have a write-up out tonight for everyone. Later, guys.